All right, let's take another look at the futures. We are moving closer to the flat line. The Dow futures right now only down by about 7 points. I'd like to take a look at Home Depot and see how that has impacted things. It's the Dow component out with earnings, and initially it was down, still down by about 0.4%, but we are looking at the Dow futures improve somewhat. Joining us right now to talk about what she's seeing in the markets is JoAnne Feeney. She's a partner and portfolio manager at Advisors Capital Management. And JoAnne, I don't know if you were listening to this last conversation we were just having about what to think with the chips, what to think with Intel. Where do you come down on this as an investor?
Yeah, Becky, good morning. Well, it's interesting that Intel, the new CEO, Lip-Bu Tan, decided to undo a lot of what Pat Gelsinger was trying to do, which was to stand up manufacturing in advance of having foundry customers. He realized that they didn't have the capability yet to serve foundry customers. Intel has struggled for years to try to move in that direction. They simply don't have all the different components, the libraries as they're called, to give to customers to say, here, these are the components you need on a chip. We've got the library for that. They don't have that library, that set of libraries that TSMC has built over decades. So Lip-Bu Tan said it's not in our best interest right now to build this manufacturing. So the Intel incentive was don't build more capacity. Now the government's going to try to come in and say, you know what, if you want that, that subsidy we're going to provide, I suspect they're going to say we need you to build that new capacity. So you have a real dichotomy between the public interest, which is, as you said, Becky, don't want to be totally reliant as a country on Taiwan semi, and the private incentive. So that suggests it's not really a great thing for shareholders in the end. You can't force Intel to innovate and solve their design problems and their manufacturing problems.
So you would not be an investor who would be fond of this, who would invest alongside the U.S. government with it?
I just think it leaves too many uncertainties out there. Does it change the trajectory of their innovation capabilities, right? That's what we all need to know if you want to be an investor in Intel. Will the government have a say? Will they have a seat on the board, right? These are relevant questions to Intel investors. And it's hard to just point to a group of engineers and say, fix this problem, fix it faster than you were going to. The extra money will certainly help if there is extra money beyond what the CHIPS Act was going to provide. And that could be a good thing for Intel's trajectory. Certainly the SoftBank investment helps.
All right, let's talk about the American consumer, because we've got retail earnings this week. We heard from Home Depot this morning. They missed on the bottom line, $468 versus the $471 that the street was anticipating. The company CFO did say that sales picked up every month of the quarter. I think same-store sales were 0.3% in May, 0.5% in June, and then 3.3% in July. How does that match up with what you are seeing and hearing and thinking about the consumer right now?
Yeah, I think the consumer is under pressure, going to be under increasing pressure as more and more of these tariffs move from affecting the PPI, the producer price index, over to consumer prices, and we're likely to see more of that in coming months. But Home Depot is kind of a special situation because they're benefiting from the demand for improved housing from a lot of folks that can't afford or don't want to get out of their current low interest rate mortgage and move someplace else. So they're continuing to do those renovations, albeit at a slower pace than they were before. You look beyond that to the broader retail segment, and you have a really different set of questions. How much is the consumer budget being affected? And again, here we really emphasize that you have to separate the consumer into the high and mid-high range to the lower end. Lower end clearly under continuing pressure because of past inflation and coming price increases from tariffs. The high-end consumer is still in pretty good shape. So when you look at retail, you've really got to parse those names. Williams-Sonoma is a strong name. Lower-end retailers are going to be more pressured.
Okay. Does that include the likes of a Walmart, which has actually done pretty well?
Yeah, Walmart is a special case, too. They have a lot of groceries. So one question, we're asking is how much will that Amazon announcement of doing more grocery deliveries, affect them? A company like Target, we think, is interesting here because they've really underperformed the retail segment. Since that Liberation Day, retail is up about 35%, and Target's up about, a little bit more than half that. So while other names might be a little bit precarious because they've run up so much as they come to report their earnings, we think Target, having built up those inventories early, which hurt them and hurt the stock, actually now is relatively well positioned, especially now that the back-to-school season starts to pick up. We are seeing some good numbers there.